look, I think it's almost certainly going to get worse rather than better. And, you know, the recurring situation that we see in the market is that it underestimates significant change. And, you know, Woolies, first of all, it's consistently underestimated significant change in the case of Woolies, and that change hasn't finished. There's a lot of inertia in these very large businesses that have literally got millions of clients, and they've got, you know, hundreds of stores, and they've got thousands of employees. And, you know, in the case of Woolies, it's still losing market share. The opposite of the virtuous circle in the case of retailers is the doom loop. As you fractionate your volumes across more stores, you get lower sales per square foot. The efficiency of your logistics chain becomes less. You're not fractionalising the fixed costs across your business as much as you were before. You know, you're having to try and grow your volumes, having to respond to price competition. You want to reinvest in the business, whether it's with better systems to keep up with the competition, or with more employees because you've taken too many out, or to refurbish your stores, as the case of Woolies has. And you're faced with competitors like Aldi, who is not just increasing their market share, but essentially taking pretty much all of the volume growth out of the industry. So, you know, it's a dire position that Woolies is in. And as bad as the margins are at 4.5% and 5%, they're more than double what the margins were before Roger Corbett came into the business. You know, Woolies has had in the past 1% to 2% margins. And you go back historically over the last 40 or 50 years, Woolies and Coles have cycled between who's the bad retailer, who's the good retailer, whose margins have gone up, whose margins have gone down, who has been underinvesting in their business and had some good numbers for a while, and then find they've fallen behind, the customer's gone elsewhere, and now they're having to pick up the spend in a number of ways and cut their prices to bring customers back. And so, adding to that dynamic, which is a natural dynamic between Coles and Woolies anyway, we've got Aldi coming in over the top. So I think it's pretty diabolical right now for Woolworths, and I don't see any evidence that we're at an end. The market continues to be surprised by the bad news in Woolworths, and it's got a way to go by historical standards. You know, in the same way that it's, you know, you take a big business that's growing strong, it's very hard to put it on a multiple that's, you know, too high, even if it's going to triple its earnings in the next 5 years. It's very hard for the market to price that, to have confidence that it's going to do that. Same way, it's very hard. You know, when Woolies had its margins at 8%, the market couldn't believe those margins were going to fall to 4.5%. Right now, the market couldn't possibly believe they're going to fall 4.5% to 2%, but that would be like a 50% cut in Woolies' earnings. Now, I'm not saying that it's going to happen, but it's certainly historically happened in the past, and so there is a lot of scope for earnings disappointment from the current levels we're in Woolies.